everyone, this is Trader Investor. Happy Thursday morning. I want to go through the markets, but I want to start off on the SPYs with the daily chart. And the main reason why I want to start off with the daily chart is because the ES is kind of was down and up. It's playing around. NQ was significantly down earlier, but it's recovering. But it's not really the point of its up down recovering. I wanted to show you what the market sentiments are. These are some of the things that I look at when I'm looking at the market sentiment. The VVIX, which measures the volatility of the VIX itself, when it's above 110, I get concerned that the whole market is in fear. When the put-call ratio is above 0.8, again, I start to get concerned that the market sentiment is more of a caution, starting to lean towards fear side. And when VVIX is above 120 and put call ratio is above 1, this is extreme fear. And so today, when I look at the two values, they're both below my threshold. So I have them color coded, so I don't care about what the exact number is. If I want to know the exact number, I just hover over it and it shows me to the left there. It's 106.29 and 0.76 for put call ratio. But that's really not the point for me. I don't really care about the number. I care about the color because I have it color coded such way. Below 110, it's blue. Below 0.8, it's blue. Then there's no extreme fear. It's actually starting to lean towards extreme greed. But those numbers really have to be low to be extreme greed. And so as long as I don't see yellow here or here, I'm not starting to get concerned about positions for my long-term investments. For trading, this really doesn't matter. It just helps me set up the market is fearful, so maybe we have room to the downside. Maybe I should focus and have bias to the downside of my trades for the day. But outside of that, there's nothing really to be concerned with. The Treasury has started to inch up again. So this is a 10-year bond. When the 10-year bond starts to increase, there's a likely scenario that the markets could come down. It is not at an extreme, so it's not an extreme pullback. If you look at March 30th of this year, and if you look at SPY around that time, so March 30th time frame, the market has really gone up, has not really gone down, even though there was extreme here to the upside. So it's just a gauge. I just look at that gauge and say, hey, where could the market be and because the US 10-year bond is kind of a leading indicator. As price goes up, it means investment is gravitating towards safe havens, towards safety. That's why those because of demand, the rates go up. But it's not just one thing to look at, right? You look at the Treasury bond, the 10-year bond. You look at the VVIX, put call ratio, UVXY, whatever form you want to look at to measure sentiment. That's the starting point. So all in all, to say, there's really not a big concern for me today, even though NQ is starting to show some weakness. But look at the daily. It just looks like it's a blip, right? We've had this trend line that is respecting, come down here, push up, come down here, push up. And so we're now having a small bar within this daily bar. There's really not a concern. There's no break of structure. There's just room for markets to breathe. And once they breathe, they resume the uptrend. So now looking at our SPY on the 15 minutes chart, where are we the SPY is looking like it wants to open near the high of yesterday. I like opening above or below the ranges here, because what it gives me an opportunity to kind of enter and target next levels. Of course, in today's instance, it might be another one of those days where I don't trade. Why? Because here Tuesday's levels are on my way. If Tuesday's levels don't give me an opportunity to enter, if I don't have a dollar move from my entry to the first sign of trouble, which in this case is 50 cents, then I'm not entering. Once I clear this, I see clearly here, I don't have a sign that I have another dollar entry. I don't have a sign of another dollar entry. What could potentially happen is, if price clears this, comes back to retest maybe the highs of yesterday or the 15-minute range high, if it happens to be low enough, and then I can now target the second area, which is about 82 cents. Again, I'm not comfortable to do that. Now, the best case scenario then would be, if price clears both of these, if price clears both of those and then comes back to the high of yesterday, then I might have a shot at it. Again, no trading is okay. So about $1 there, I might risk it if I get that kind of move. Outside of that, the yesterday being an inside day, really contained within the highs and lows and more towards the bottom half, it is not giving me a lot of room to play with. Not a lot of room to play with. If then I have an opportunity to really break out of Tuesday's highs, then I can start to target the order blocks up here. This order block would be a good target, and that gives me a good opportunity. So that's what I'm looking at when I look at the SPY. Qs, when I look at NQ, it's showing me that Qs are a little bit weak today. As you can see, the pre-market, it could open near the bottom half of yesterday's range. Again, an inside day, inside another inside day. Not that exciting. So I want to see really the highs of Tuesday broken, or I want to see the lows of Tuesday broken. We have this liquidity area, maybe break that and start to target somewhere down below. Again, caution, if we break here, same thing as yesterday, there's not enough space, right? That's why yesterday I said there was no entry for us here. If a good sign would be we get this area manipulated, and we form a lower high somewhere there to target here, this would be beautiful entry. Because then it's giving us the distance we want, right? It's all about getting the distance. It's all about getting the distance of more than $1. That would be a beautiful entry. Again, we trade what we see, we don't trade what we anticipate. So right now, there's nothing that is telling us what the markets want to do. This orange line, as soon as the market opens, would move up here. This green line will move down here, because these were Tuesday's highs close and the low down here from Tuesday. But as soon as the market opens, then it will have its range here on Wednesday's numbers. So again, no entry for me in Qs yet, nothing that I can see. IWM, because I see the Russell is having an up day, IWM is most likely going to open in this order block range somewhere in that area. Then I just want to be cautious. Now there's plenty of space to the downside. To the downside, we have this. If we get this entry here, it's $1.57. So to the downside, I see in the IWM some potential. Again, these would become kind of headwinds. This areas where price swings, it forms a low, goes high, forms a high, goes low. These are areas to just be mindful of. And as we clear this order block, we have next order block. Just be mindful of that. We're going to prepare for those setups. Diamonds, really diamonds, again to the upside. When you look at YM, it looks like we are going to open way up here, which is great because we're starting to clear some of these roadblocks, and we're going to target this imbalance here depending on where we open. So from here to the mid of imbalance at $1.30 is fantastic, but if we don't open right there and stay right there for a while to give us an entry, then it's not going to be that interesting. What I mean by that is, let me read through this way. If the market gives us this 15-minute range, I no longer have this dollar move because my target is the midpoint of the imbalance. It could push higher, then I look for re-entry possibilities, meaning it breaks it, it retests it, and then I can look for that opportunity to go long, to buy a call option. Outside of that, I'm not rushing to do that. That's not how they're setting up. And to the downside, there's plenty of room to the downside because of where we're opening, but where's our headwind? The mid of Tuesday of the 15-minute range, the low of the 15-minute range of Tuesday, and the whole range of Wednesday. These are our headwinds, and as long as we're not clearing these, there's no dollar move for me to enter. Again, I'm okay to skip today if I don't see the setup. If I skip today and price does this, will I get upset? Absolutely not. Why? Because I stuck to my plan. My plan says if this is a headwind, and then these are headwinds, and I don't have enough distance to enter them, I'm going to skip them. There's just not enough distance. Even if let's remove these drawings, even if price clears one level, reverses, I don't have a dollar to the next level. If price clears the 15-minute range of Tuesday, reverses, gives me an entry, do I have a dollar to the 15-minute range of yesterday? Right? These are all the things I have to look at. Some of the areas where price could stop me, right? So here 60 cents, for example. So because of this, I'm okay to skip today. I want to have my accounts protected and not take positions. If I see something that's really appealing, I might do a very small position, maybe a quarter of my normal position. But for now, unless it's to the upside, to the downside, I'm not taking any risks. So this is how the markets are setting up. This is how I'm preparing for today. And so I will come back and do another video later on after we see the action. Does it align with my initial assessment? Did markets do what I wanted them to do? And did I participate or not participate? We will cover all of that later on today. All right, everyone, take care, and I'll see you in the next video.